RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief, our public broadcast. My apologies. I'm sure most of you are like, oh, the Beamish. I don't want to listen to this clown. Our crypto, well, let's call him just trading guru, Julian, is away today. Well, maybe crypto too. I have to say, Julian gave you all really, really good. We don't want to use the word advice. This is not financial advice. But last week, I even gave shout outs to him. I was so impressed. He was kind of like, this crypto bottom, this is way too easy. Usually these bottoms are ugly and they're nasty and they're evil and there's a lot of trouble and stuff around these pivots. And I got to say, man, that was really, really good, really good words of wisdom from him last week. Might even have been 2 weeks ago, if I'm not mistaken. But anyway, so my apologies. No Julian today, but he asked if I could fill in for him today. Hopefully he'll be back ready to go, and maybe he'll do tomorrow. But if not, maybe you just get just a solid week of Beamish here, which, I think there are worse things that could happen in this life. But anyway, so just get on with this report. It's about 4 minutes past the top of the hour on the West Coast, 9 o'clock here, noon back east, I guess early evening over there in Europe. And I suppose the middle of the night, poor old Julian, when he has to do these at this time. Still think it's not a bad idea. He was suggesting that maybe he just pre-record his video earlier on in the day and then maybe just play it for you guys. I don't know. We'll see how it goes. But anyway, 13th of June. So we're basically marching our way through the month of June, almost halfway through this month. Wow, that sure went quick, eh? And some interesting curveballs. Of course, we had FOMC yesterday. And that in itself, usually I don't trade very well through FOMC events, a lot of FUs. Then today, actually, you can see the crude oil market is in the roll, moving from July contract to August. And if I'm not mistaken, I think the June contract for the big stock indexes, ES, YM, RT, all those guys, NQ, they're all rolling from June to September here. So a little bit of a wonky period here in the market, kind of not really a good time to, take serious bets in the market. And of course, with what we've seen out of crypto, overnight and over the past few days, maybe we ought to just cool our jets there. If anything, I have been saying repeatedly over the past, couple months, I guess, that usually the market actually, especially with regard to things like crypto, usually the market sells off into June, sell in May and walk away, Brian's birthday. You've heard lots of references to that kind of stuff. And then we don't actually end up bottoming until we go through the July 4th holiday weekend. And this is going to be a really weird one this year. Like a lot of the, I guess, Western countries, I don't know whether they even celebrate these kind of days over in Asia and Africa and stuff. But a lot of the sort of Anglo-Saxon, maybe that's probably and actually I think that is changing as we speak. So I don't know whether we want to use that reference anymore. But a lot of those countries, right? England. Actually, I don't even know whether continental Europe has holidays beginning of July. But, China Day here, for example, we have the Victoria Day, although, no, actually, this would be Canada Day. And on the 1st, and then of course the Americans have their Independence Day, although I think the banksters have completely taken over their country, so they're not really very independent anymore. In the day trading room, we actually had a fun debate this morning as to how similar is the FOMC controlled United States of America to like the Politburo of the Soviet Union, or the, I don't even know what they call the Central Committee over there in China. I have a feeling actually they're very, very similar. But anyway, that's a conversation for another day. Point, I suppose, here is we got to get through this window. Usually this window is kind of tough. And if I'm not mistaken, there was a fairly sizable punch in the nose in crypto land here today. Yeah, great. Now my computer, I taxed this computer to death. Poor old computer. But anyway, you can see it a little slow in changing screens. But big scandal here in the crypto space as one of the popular tokens. I'm not totally familiar with this. If anything, we have a crypto expert on the site, Sjord, and I don't think he's very happy today with this. But if I understand correctly, one of the founders of this particular token and the leverage sort of plays that they do off of these things, Mr. Michael Egorov, I'm not quite sure if I'm pronouncing that correct. Anyway, looks like he's got himself, let's just say he's got his short and curly's caught in the ringer. That's probably the best way to describe this right now. I suppose on this coming Tuesday, we'll have Stuart try and explain what specifically happened to our audience. All I'm going to say is, actually, in a weird sort of way, this is kind of what needs to happen to mark one of these cyclic pivots. We used to always say crypto can never end a cycle without some sort of horrific scandal. I don't know whether this is, it's going to be limited to this. What you might find is that this actually turns into some sort of cascade. And the worst part about all of this, of course, is, type a Y in the YouTube. I know there's not a lot of people there, but nonetheless, do you remember Three Arrows Capital and the way previous cycles it would, and then of course Luna, you remember the way that it sort of starts off a cascade, and one liquidation leads to another liquidation, leads to another, and it becomes a big wipeout. And I have a sneaky suspicion one person here remembers Three Arrows Capital. That's a little dangerous. Somebody in the Zoom call here goes, not at all looking forward to your perspective. You had a feeling this is going to be a bit of a nasty conversation, eh? So it is what it is. One thing that actually had me scratching my head through this whole experience was how the total market cap, and we've been watching this for quite some time. And oh, by the way, I got a whole bunch of stink bids down below on these. And actually, I was even just reviewing with Chris where my stink bards, like, I really want to buy some of this spell, but I'm not going to chase this. And of course, you all know full well what I think of what happened there. That's, a few months ago with people chasing these insane up markets. But I guess I'm off on a little bit of a scatterbrain here. Where the hell is this? Oh, here we are. I've got the total on here, and I've been scratching my head trying to figure out, I'm actually quite surprised that this thing, it's putting in M's, but it's just not breaking. I did have the Bitcoin short working, and of course I moved my stop to scratch, and what a doofus. You can see I got stopped out at scratch on that rally into the FOMC. And man, I always fall into this damn trap, right? I get liquidated on these positions, and it was, my rules are that if the market moves a good chunk in my favor, I have to walk away if it comes back to scratch, because, it's just the way it is. Don't want to see a winning trade turn into a losing trade. But you can see Bitcoin just promptly, as soon as the Fed meeting happened, we just melted right back down to where we are. And this silly market's probably going to go to my target anyway. But Still working the Ethereum trade, and good to see we're flirting with making lower lows. So that trade's still working pretty nicely, and I just want to sit tight in this, hopefully. It's good to see I didn't get my stop at scratch level hit here. And I think I've been telling you that, I kind of looked at this chart and I was like, this is awfully cliche. Things like the Adam and Eve market smile, actually a little bit smile here. But I guess I'm scratching my head a little bit in that, this correction hasn't really been that deep. I mean, if this CRV thing turns into some sort of massive cascade and we do start seeing this thing melt down in earnest, just be fully aware. And, I'll talk more about this as the days and weeks progress. We do now have a double top now working on the total within this bigger double top, M's within M's. Be careful here, folks. So, crypto's looking a little heavy here today, no doubt about it. And we do have fundamental drivers that are driving the story. So, probably best for everybody just to cool their jets. We don't need to be like uber bullish through all of this. If anything, one thing that I noticed, and really what I like to do with all of you, is start off with the dashboard. Question is, where's that screen? We did yesterday get to the point where we had a smattering of an oversold condition there on crypto. The only problem is actually the market firmed up there through the FOMC. And you can see this is as of June 11th. I think actually this should have one more date on it. Might need to, oh, there's 12th. Oh, okay. All right, we'll stop that. So anyway, the point being, oh, now what have I done? All right, well, way to go, Brian. We are getting to that oversold condition, right? Which is what you need to see for the market to actually mark a cyclic turn. But one thing I didn't like seeing yesterday, following this, so on the 11th, so 2 days ago, we actually had we just got to minus 80. And of course, the medium term, we are pretty oversold. But then coming out of the Fed yesterday, you actually saw that crypto actually ticked up out of that oversold condition. I don't want to see that. What I want to see is this thing just be embedded, stay embedded, and then let's get some W's to start forming on these price charts. And then we'll know that we've got some sort of bottom here in the market. So a little disappointed to see that the crypto index actually ticked up yesterday. And you can see the broader market, it's trying to tick up. I really don't like this because we're just sitting in no man's land right now. We could easily bob and weave all around here. And I guess the one thing that I did like seeing out of the crypto, and I'll just give you a quick boo, but for our site members, we do have a crypto page that actually gives you that graphic. You can see the market is trying to turn up here. We are getting that cross, but my hunch is with today's price action, we're probably going to see this dip back down. We are, basically oversold here. So the question ultimately is, do you actually start seeing bullish setups setting up on your price charts? And unfortunately, what I see here is I don't see any W's. I don't see a W there. There was a potential that maybe we were going to see W's come in on Bitcoin. If anything, maybe the tell was because that was such a violent V bottom and this was a V top. Here we are coming back down to test these lows. If we can hold these lows and then actually start pivoting back up, maybe we've got a case for us to get back bullish again. Also, too, you can see the moving average system. This is a 4-hour chart system. You can see when the moving average is cross bullish, you should expect a nice little pop, and usually a W comes in off that. You can see the moving averages are very comfortably negative here. So I don't really see any reason to be overtly bullish. Interesting, I've said this, repeatedly. I still think that Bitcoin itself is trapped within this range. And because guys like Fink and stuff like that are controlling the Bitcoin market through these ETFs, I think that basically this is your price range. I think we can take this inverted head and shoulders idea off the table. But I wouldn't be surprised, you see these price gaps. We're probably going to have price come back down, fill in these holes here. You can see on the ETF, the momentum here is pointing down. So there's really no reason for us to be overtly bullish here right now. But the way that I'm looking at it, and I showed you there just briefly a moment ago, is I'm working stink bids on names that are at or below reload zones. And in this one in particular, working my stink bid off of 88.6 here. I'd like to try and get filled down here. I was in there nibbling away on the Solana stories. I don't know whether it's very popular or not, but I thought it was funny just to have a little bit of this Jim Cramer coin on the books. Maybe I'll see if I can show you a darn chart that'll load. Are you going to load Bird Eye? Bird Eye, I don't know. I think it's a bit slow. That's probably the only way I can describe it. Let's head maybe over to the deck screener. There we are. I mean, a lot of these names, there's no way in hell I could touch them right now. And if anything, I need to see them come back down to earth. And a lot of these high flyers that we actually even just recently sold on doubles, like this Zach, I bought this at 4.3, sold it at, I think around 9, 9, 8, somewhere in there. Look at it, it's 5.8 now. It's come right back down to the bottom. So I'm not ready to even think about reloading on any of those guys. But there was a fun little coin, Jim Cramer, and it's really, really low cap. So this is not, this is just having fun in this space. But, Beamish, she likes to buy against lows, sell against highs, and, just rinse and repeat, bang out doubles. So you can see, this is, and I even put the tweet out. I said, this was a shark setup. I wasn't allowed to buy here. I had to wait for this thing to come back down and slowly. I've got like 2 or 3 different bids working, and the fills are slowly coming in here now on this thing. So thank you, sir. I'm more than happy to step in on the buy side of these, but they have to be right back down at the very bottom end of the range. And I think we're actually going to see a lot of that over the next few weeks. Like I said, I've got stink bids on altcoins. I've got stink bids on these poop coins. The only market that actually I'm scratching my head about, like I said, is I can't really buy Bitcoin here. It's just way too expensive. I don't think it's an efficient use of my capital. And if anything, I hate to say it, but it sure looks to me like things like Ethereum here. I don't want to step in and buy this right now. If anything, I just want to leave this thing alone and just let it settle down. And I wouldn't even be surprised if this thing has to come back down. And the irony of all is this is just so cliche. Watch what happens when I put the reload zone on this thing. So boom, there's your reload zone, and my 2-to-1 profit objective is just sitting right in that reload zone against all this original market structure bottom. So I don't see any reason why this can't happen. And then the question is, great timing for the phone to go off. The question ultimately here is there's going to be some sort of cascade effect that kicks in based on this whole CRV story. And I think if anything, it's in all of our best interest just to let this settle down before we start getting too bullish again. As for the broader market, as I sort of pointed out, kind of in no man's land. I don't really like where we are in the market. And I noticed, in the day trader room this morning, of course, we're watching all these markets like a hawk. Through the EIA report yesterday, I had a nice little short that came in, took some profits. You can see down here, buying them back. And then I just left the runner on. And I really haven't done anything here today. And I did notice that a new M has come in on crude, and it's got a W. I get the distinct impression this is going through the roll right now, that they basically just parked price. I guess the markets that are really jumping out at me right now, the ES, right? This is sort of the bigger, broader market, got relatively, and this is a tough one, right? This is the glass half empty or is the glass half full? Because the news today, the Econs is, well, from an inflation perspective, the pressure is coming off. So we had out specifically this morning. I don't know which screen I have this on. I think it's, maybe it's over here. Yeah, there we go. Producer prices are coming in softer on the whole. This is a month over month projection though. if we actually look at the year over year projection, it's okay. I mean, they're saying US producer prices unexpectedly fell in May, but I've talked to you a lot about this. I mean, what's a big inflationary component for industry? Well, it's energy. Um, and we've seen energy prices here. I mean, I just showed you that crude oil chart, what's happening here today. But we've seen on balance that the energy market's actually been pretty weak lately. So really, and you heard, I don't know whether you listened to, excuse me, whether you listened to good old Jerry yesterday, um, and him sort of saying that, at the beginning of the year, we had unexpected price inflation that sort of put all their sort of, we're going to cut rates, put all that kind of conversation on pause. Then we had energy prices since basically the middle of April. So this is basically 2 months. Energy prices falling. They really fell out of bed about a week or two ago, but you can see that basically over this past couple of weeks, we've gone straight down and straight back up. And here we are just sitting at this very interesting level for the crude. Not only do I think that this is a midpoint of a megaphone, but also too, notice, look how the moving average is. We were below there, and you would basically say, wow, everything is bearish. We're below the moving averages. Notice how it was almost like they were like on a mission, that they had to get the price back above these moving averages. And now I actually think you're probably going to see price sort of settle down. And does this make an A, B, C, D? And we have to go tag the top of the megaphone, which means that all of this wonderful talk about deflationary pressures and stuff, that's going to all be priced back into the reports for like the June CPI and the June PPI report. So, our whole sort of conversation about what's the direction of inflation right now is hinged, I think, on how this chart actually resolves itself. There's some interesting inside little pieces in the market. I even tweeted out this morning that it looks to me like the inflation deflation gauge that I like to follow. Where's that over here? The TIPS versus TLTs. This is actually pointing towards, and it's a positive number, so it's not in deflation. Right? Deflation, theoretically, ironically enough, was after the U.S. housing market crisis, and heading into the Jupiter-Saturn cross, the end of that 20-year, actually 40-year fall in interest rates. This was deflationary. The sad part about it, of course, is because we live by the banksters' rules. There's no way in hell that they were going to let all the assets they own deflate or basically fall in price. So they just kept printing through the deflationary environment to make sure that prices did not go down, which of course is disgusting. Now that we're on the other side of the Jupiter-Saturn cross and we're on the other side of these huge fear-greed cycles, boom, we're right back into the world of inflation. And of course, you all are enjoying the wonderful gift that the 1% is handing to us. Thank you very much. You bleep, 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 bleep. I'm going to try and stop swearing on these videos, but you get the idea. So yes, it looks like we're topping out. It looks like maybe, if you were an Elliott wave kind of person, is this wave 5? Usually wave 3 is supposed, 2 to 3 is supposed to be the biggest wave. I don't know whether that's the case here or not, but it does look like we're topping out. And, if you actually look at the headline data, theoretically, we're actually now in a commodities bear cycle. I would actually make the argument that that the commodities probably will spend the next 10 years. Maybe they won't go down appreciably. Great reset. Thank you very much, stupid bankster crooks. But I don't know whether I'm really looking for really uppy prices. And also, too, like you look at the headline number of crude oil here and you go, oh, well, it's $80 a barrel. What are you talking about deflationary? What are you talking about low prices? If you actually look at this relative to the money printing, which we've done extensively over the course of the past 5-10 years, you'll understand exactly what I'm talking about. It was interesting to see gold and silver really coming off here. Did put out a warning, and actually on Monday, I'm going to go revisit our buddies at the social media guys, the Silver Bulls, Wall Street Silver, I think they call themselves. I did sort of talk to them last time I was with them about the Great Reset and the commodity super cycle, all that kind of stuff. But at the same time, too, I've been putting out a lot of warnings to the public that momentum's waning. We have M's in the market structure. What are you supposed to think about if M's? And sure enough, this is business as usual. Now, do you blame it on the weak CPI data? Do you blame it on the weak PPI data? Or do you say, well, it actually looks like the market itself was pricing in that maybe the inflation problem, that's this conversation, is on pause for now. I wouldn't call this deflationary. You heard me rant there a few minutes ago about deflation. I'm just going to simply call this disinflationary. That's the way that I would describe that. And I would expect in a disinflationary environment and the market just moving one direction in silver for probably way too long, we have to clean this chart up. It got too overbought. It got into divergence, and we got M's in price. I mean, this is everything that we teach in the education program, that maybe we should be looking for a pullback. And, if we can get back down into this sort of $20 to $25 area, well, that's everything that we look for in price structure, trade location for your number one reason to justify investing. I still think that's the case. So, not only was this very public call, and I often say, well, let's see how this tweet ages. I think that this is doing exactly what it's supposed to do. And I certainly don't see any reason to step in on the long side here just yet. So in a weird sort of way, I don't think crypto is isolated in its pulling back. I do think to a certain degree, crypto is an inflation proxy. It's just, could we see this thing pull back here precipitously? We do have a cute little double top now there. We're going to need to see a loss of this 13 EMA. You notice how the 13 EMA really held price in here nicely recently. So that's probably a support line here in the short term. If Mr. Fink and the 1%, their agenda is don't let this ETF break down in earnest. We're in nothing more than a trading range. And when the market needs to go down, fine, it'll come back down to the bottom end of the range. Okay, fine. But just please understand that this does have the potential for coming off a good chunk here. So just be forewarned. This was our current playground that I posted a few weeks ago. And, there are reload zones down there. So just be careful here, okay, everybody? Please. And, if you are going to go in and buy now, I think that the prudent strategy, and this is what I teach all of our sort of very beginner traders, is start with the little old lady approach and just nibble. All you're doing is nibbling. I wouldn't even consider, frankly, this thing just got back into reload zone. So, okay, maybe it's all right to nibble. But I might even argue, I often teach people on the site, maybe think about the venture cap reload zone, which I like is sort of between that 78.6 and 88.6 level as like a nibbling zone. And notice too how this 78.6 lines up with the original market structure bottom. We got a little stab in there. I think that was a fantastic trade. And I'd be more than happy if it can stab back down into that area to buy something like this. Very typical. And the irony of it all is this image, me buying off this market structure level into that 78.6, is ironically enough exactly the same as this image. This is 88.6. There's the double bottom, and I'm in there nibbling away. So, ironically enough, when everybody else, the sky's falling, you're probably going to find if you come over to TRI in our community, people are relatively calm, and they're actually coming in on the buy side and buying into a lot of these names that look like this. So how ironic, eh? Okay, I think that's about it for the free broadcast today. That was about a good, geez, gave you a good half hour there. Hopefully, I put the market into context for you. I don't know. Is there anything else I was supposed to mention here before we leave? Oh, damn, I can't even read this thing. Hold on a second. I got to get the screen to the point where I can read it. All right. Oh, Broadcom. Yeah, stock move up quite a bit. I suppose we can maybe talk about that in the after party. Talked a little bit about silver, talked a little bit about CRV, talked a little bit about PPI and the inflation data, and we briefly touched on the breadth. And, for all intents and purposes, I'm actually liking the way the breadth, and we'll leave off on this note. I actually like the way the breadth is looking here for crypto. I just want to see the market nice and washed out. Oh, no, don't do that to me. All right, there we go. We're back. I'd like to see this get nice and washed out here, both heavily oversold, and then we'll know for certain that we're pretty darn close to a bottom. And, put that together with this whole idea that usually, I've been at this now a decade, usually there's some sort of big, ugly thumping into the end of June, and then we ultimately bottom through this July 4th holiday weekend. I'm still feeling like that's the case. So I'm not really in a big hurry to go and pound the table that this is a screaming buy. I don't think we're there yet, but we're finally getting to the point where this seasonal correction window is playing itself out. And if anything, I think I said yesterday, and I'm going to reiterate this message, we're in the train. We're looking out the front of the train, and you can finally start to see sort of the light at the end of the tunnel. We're getting closer and closer and closer to the end of the correction tunnel, and probably within the next 3 weeks or so, we'll be back out into daylight. But it's not quite here just yet. But the good thing is, we're actually starting to get the scandals that usually marks the bottom. So that's, I suppose, a good sign in a weird sort of way. Okay, everybody. Have yourselves a great day. PMA for the win. Slow and steady wins raise. All the best. Maybe since I am here on Thursdays, I go out and I take Liam out Thursday afternoons. So maybe you can give us a karmic best wishes that we don't get run over on the roads here today in crazy BC, Canada. Anyway, have yourselves a great day. All the best. The only thing left Brian say to you is bye for now.